$7,763 in one day. And that was only from 3 traders. Now in this video, I'm gonna walk you through how 3 of those traders made all of that money in a short period of time, what the strategy was, how it works, and then maybe how you could get your hands on the same thing. And just so you know we're not full of shit over here, here's Chris's morning, so June 30th when I'm recording this. He had a very nice morning making 2,300 bucks across multiple accounts. Very nice. I had a couple accounts. I actually, in fact, account for the least amount of profit of all the traders I posted today. So here's mine. We actually ended up trading a second account later. Ben ended up going $4,600 this morning across 7 evals. So he balled out, got funded last Friday using the same strategy, and then I finished 530 plus in one of my accounts as well. Now the strategy these traders use to make over $7,000 in one day revolves around the volume profile. Now, if you are unfamiliar, I'll break it down really quickly. The volume profile simply measures transactions, okay? Very similar to like normal volume that you've seen before, right? So volume down here just measures volume per candle. So each candle has its own candlestick of volume that it's measuring. It tracks a certain period of time. I'm on a 1-minute chart. Each one of these is measured by 1 minute. So how much movement or how many transactions occurred within 1 minute. The volume profile goes from a vertical landscape to a horizontal. So instead of looking at volume per candle, it looks at volume per level. So how many trades were taken at a particular level. The place where most trades were taken is called the point of control. It's this red line right here. Okay, it kind of acts like VWAP, not exactly, but it's very similar. Where there are a lot of trades, price is going to be very attracted to it. Okay, it's going to dance around that level. Essentially, how many candles or where did the most amount of candles touch in a given area? That is going to be your point of control. Now, you have the value area, which is the highlighted section. So this is where, depending on how you want to customize yours, mine's a little different, but about 70% of transactions occur in this highlighted area, okay? And then the other 30% operate outside of this area. Now, if we go back and we continue to like zoom out, then the profile might get bigger and bigger and the value area could certainly change. But this is the volume profile. What it does is it looks at, okay, how many trades were taken at a specific level, and then we can use those levels to interpret maybe what to do next. Now, this is a big old volume profile. It's very difficult to do things with this one because it's really zoomed out, doesn't give you a lot of feedback. And so what we use is the volume gaps. And that looks like this. So this is the volume gaps. It's a volume profile built for scalpers. So we compress the profile down to just a certain amount of candles, and then we look at data and transactions at these specific levels. Now what we do is we go short off of low volume nodes at the top. So sell, sell, sell. We'd be selling this, right? Because there's not many transactions. And we'd be going long off of the lower volume nodes. So we'd go long down here if price got down here, and we'd be going long right here. Why this strategy works is this isn't like voodoo magic, like, oh, open range break the first 15 minutes or every 5 minutes something occurs. It's not about that. It's about simply looking at where price has transacted and where it hasn't. Where it transacts a lot, this would actually be our point of control right here. Okay, we want to avoid trades. We know price likes this level. Right now we're looking at about 22,857, 856 to 860. Price likes that level. But if it breaks away from that level, okay, fantastic. Let's try to find a place where there aren't a ton of trades, where there aren't a lot of transactions happening, because we know that acts as resistance. If price doesn't want to go above this level, when it gets up here, boom, it gets shot right back down. There aren't two sides to a transaction. There are less buyers and there are more sellers. Same thing down here, but the opposite. There are less sellers and more buyers. So when price gets down to these levels, we want to take a trade. Where there is light volume, there is a one-sided transaction happening. So up here, so far, at least right now, we have some buying, but at these levels up here, it's all selling. Price does not want to go beyond these levels. So we could take an easy sell or an easy scalp down from here, and that would have been a 10-point move pretty easily. And this is an upward moving move, and we'd look at maybe why we would want to take something like this, but that's for a later video. This is the strategy. We use the volume profile and we break it down just for scalping to find the right points of entry for price when it's going up and when price is going down. Now, most of the trading happened this morning, and I was live on YouTube, and so I got to be with Chris when he made his 2,200 bucks, and he watched me make, we'll call it $400 or so, and I made a little bit after we got off of that as well, was in this region right in here. So let me scroll back to this, and I want to put my cursor like right here so we can see what was going on. Is we had price, what looks like chop to most traders is beautiful price action to me, okay? What looks like price is indecisive and doesn't want to make a move is perfect for what I want to capture. okay? And this is pretty simple and easy. Let me actually bring these down really quick so you can see kind of where the lines are. We'll go resistance, we'll make it 3 for both. That way it's really easy for us to see. All right, so these line up beautifully because we're looking at levels of price, okay? But we have price right here. It's not going anywhere. We had a nice drop off in the morning, kind of right around the open. Price runs down, fantastic. Then it goes sideways for a while. But all this sideways movement is money in your pocket if you know where to actually look. So we had price get up to here and we sell that back down. Is able to catch one of these moves. Very nice. Price gets up to kind of this weaker move up here. There isn't a ton of volume at this point. It runs on me a little bit, pulls back. Great trade. Then price gets down to these lows over here. Low transactions, buying down here. Now, in all fairness, I missed this one too. I missed these 3 spots trying to go long a little bit lower. So I kind of wanted to be at this white line and these 2 lines didn't get there and this one didn't either. So I kind of missed these 3. I was able to capture some selling up here as well off a different strategy. But for the most part, I actually missed these. I could have made $1,000 myself had I just caught 1, 2, and 3 right here. But essentially what looks like indecision to a lot of traders, what looks like just like boringness is actually very predictable. When price goes sideways like this, we know exactly what's about to happen. Price is going to meander and move up to levels where there aren't a ton of transactions. That becomes, in this case, resistance, or down, and that becomes support, and price is going to snap back, okay? Then it's going to try the other side, all right? Then it's going to snap back. Now, being more specific, when we have price ranging, especially inside of the value area where price is really flat, trades become a lot easier. If I said this is your resistance and this is support, all of your trades become a lot easier to spot. We know maybe we can go long somewhere in here, giving it some space, and the ATR wasn't high at this time. This is like 10 points, so not much. And this is about the same up here. If I told you to go short up here and go long down here, this would really frame up what you're looking at and make trading a lot easier. We're not looking to catch 20 and 30 and 50 point moves. We're looking to catch like 3 to like 12. And the 12-point moves can turn into 20 or 30-point moves if you catch them at the right time, but that's not what we're after, right? For example, had we gone long, okay, down here, this could have turned into a humongous move. Now, would I have held on to this whole thing? No. But could I have? Yeah, sure. And so this would have been an awesome move. Selling up here would have been an awesome move down. So you can turn some of these scalps into big moves, but for the most part, we're looking for very small moves. We're looking to be surgical, get into where the market doesn't want to go, where the price really doesn't want to go, and then hammer sells up here and hammer longs down here. Now, why does a strategy like this work so often and so well? We were looking at this up here to go short, look where price ended up doing. Why does this work so well? It's very simple. We understand that price does not break out and make brand new highs and lows all that often. In fact, only 20% of the time will candles really be in discovery mode. Now, I consider discovery mode as price has broken away from like the support and resistance levels and it makes a new low in comparison to where it's been recently. Okay, so like this is kind of news. And so technically, like this area right here is price discovery. All of this had already been captured before. Okay, price does not typically break outside of its historical highs and lows. And I don't mean like all-time highs, I mean like relative highs and relative lows. About 20% of the time price does that, 80% of the time it doesn't. And so our odds of success when taking a trade at a high or a low or a relative high or low are basically 4 out of 5. Meaning our win rate by default of the way price moves is already going to be way higher than if we're trying to trade breakouts. You try to trade breakouts, I did them in the past. If you go back deep enough in this YouTube channel, you will find that, okay? When you trade breakouts, you've got a 1 out of 5 chance or a 2 out of 10 chance that price will actually do what you think it's going to do. And so like the odds are already stacked against you. There's no reason to go to the casino if you know you're only gonna have a 20% chance of winning. Imagine go to the casino and you had an 80% chance of winning. You could win 8 out of the 10 times that you played. Like there would be no casinos because they'd be out of business. That's how you look at the markets. A lot of this is betting, is gambling. But what we want to do is trade and take the best bets that have the best odds. The best odds are trading reversals, not breakouts. Now I've got some pretty sweet updates coming to the VGAP strategy, so stay tuned for that. But if you're somebody who's like, this sounds interesting to me, I don't know exactly if it's for me, but I do want to learn a little bit more, actually go in the description and you can book a call. We'll spend 30 minutes, we'll go through some things, I'll kind of walk you through what it is, how it works, You can ask me questions as well. And if it's a good fit, you can jump in and get access to it. This is a very small, tight-knit community. I don't want it to be hundreds and thousands of people. That doesn't make any sense to me. We'll be very strategic with this because if you jump in, my number one priority is getting results. Like I want you to get results using this thing. I don't want you to jump in, get access, and then like don't use it. All right. So I'll put a link down below if you would like to just book 30 minutes. We can talk through it. Please show up because I'll be pissed off if you don't show up. All right, we'll do a Google Meet so we can go face to face. I'll walk you through some things. But this is exactly what it is. If you like access, book below. If not, keep enjoying the free videos. I'll keep pumping them out and I'll see you in the next one. Peace.